Hey, before I dive in, let's get one thing straight. I'm not a SEBI-registered advisor, analyst, or financial planner. Everything you hear in this video is just for educational purposes. Don't treat it as investment advice, or a recommendation to buy, sell, or hold any security. If you're thinking about investing, always do your own research and talk to a certified professional. All right, with that out of the way, let's get into the world of leveraged buyouts, or LBOs, in India. So what's an LBO? Imagine buying a company mostly with borrowed money instead of your own. Sounds risky, right? But here's the twist. Some of the world's most successful private equity deals have been LBOs, and yes, they've created massive wealth. But it's not for the faint-hearted. Let's break down the 10 key factors every investor must know about LBOs, using real Indian examples. First up, debt financing. The core of any LBO is, you guessed it, debt. Take Essar Oil's acquisition, funded by a mountain of loans. High leverage means high risk, but if the company's cash flows are solid, it can work out. So always check the debt-to-equity ratio. Next, cash flow is king. If a company can't generate steady cash, it can't pay back that debt. Hindustan Zinc is a classic example. Consistent mining revenues made it a solid LBO candidate. Third, private equity loves undervalued targets. Think Fortis Healthcare before its restructuring. Great potential, but ignored by the market. Fourth, a strong asset base matters. Tata Steel BSL had valuable steel plants and land, great for lenders and a safety net for the acquirer. Fifth, operational efficiency. LBOs often succeed when new management cuts costs and boosts productivity. The Vodafone-Idea merger needed exactly that to survive. Sixth, always look for a clear exit strategy. PE firms aren't in it forever, they want to sell, maybe through an IPO, or cash out. Blackstone's partial exit from Mphasis is a textbook move. Seventh, management buy-in is a big green flag. When existing promoters join hands with private equity, it usually means smoother execution. Just look at some Shriram Group deals. Eighth, don't ignore regulatory checks. SEBI, RBI, CCI. LT's Mindtree bid showed how tough this can get. Ninth, beware the risk of over-leverage. Too much debt can destroy a company. Reliance Communications is the cautionary tale here. And finally, value creation. The whole point of an LBO is to create wealth through better operations and smart exits. GMR Infra's assets have attracted global PE for exactly this reason. So are LBOs a boon or a bane for Indian markets? Can heavy debt actually drive growth? Which companies are next in line? And most importantly, should you ever bet on a company under LBO? Remember, past performance doesn't guarantee future results. Regulations change, markets shift, and risks are real. Always do your own research. And consult a SEBI-registered advisor before making any moves. Knowledge is power, but investing without guidance? That's just risky. Hey, before I dive in, let's get one thing straight. Everything you hear in this video is just for educational purposes. Don't treat it as investment advice. If you're thinking about investing, always do your own research.